Good afternoon, traders. This is Alex at PureTick. And today the video is being made actually in the afternoon, October 30th, 2015. We're reviewing on the screen here the Wednesday Fed move trade. Just a quick example of when we say that the first move into support is usually faded, and then if it visits the support level or resistance, obviously the opposite way is true, the second time usually that support breaks. So if you look at the chart here, we have this again is Eastern time, so right after 2 o'clock you have the Fed announcement. So what you see is right after the report, a test of the high. You don't want to enter any orders during this because it's too thin. Obviously, if a market goes up to 17,630 up here and comes down almost 100 points down here to 530, a little bit higher than that, and bounces back up, somebody bought it. Somebody was able to come in and buy at this level and push it up. There's your support, there's resistance. So what we say is the first time it comes down to support, as here, you can actually have a scalp long. You buy that pullback, you have a relatively close stop, and the market goes up. However, we looked at the cross of the moving average, so we ignored the buy signal and we said if we break the support, we go short, which the low over here was 17,550. So we sat there with a 449 sell stop for aggressive breakout traders, and then for the retracement we went in and added on the subsequent pullback. That brings me to another question. How many of you find that when you're in a trade you get nervous and you take a few ticks for a profit, but then when you take a loss you hold on too long? One of our clients, won't mention names, has been consistently grabbing 7-tick profits and 15-point stops. Now, the client is still ahead of the game because he has more wins than losses. But here's the problem. What if you always only take 6 or 7-point profits? You're never going to get a runner. How do you get to where you're going to hold it? And our solution really is pretty simple. What we do is you try to improve 1 tick at a time. And I actually told this client, look, from now on, your next trades, you're going to get 8 ticks. You know, just in 2 weeks, the client not only grabbed 8 ticks after a couple of tries, but now has had a 27-point winner, a 33-point winner, and not taking any more risk. We sometimes just establish our own mental barriers, and that's such a shame because when you think about it, the market does give us opportunities. So you can't go from taking 7 ticks to taking 30 ticks of profit overnight. It's usually too much. It's something that your mind feels is unobtainable. So you have to do it just one little increment at a time. And that's the best way to succeed. If you do it that way, like anything, like losing weight or any other endeavor, you're going to find it a lot easier to do things on an incremental basis. And that brings me to the question of 7 ticks. I've heard that. You know, you get 7 ticks of profit and 10 or 20-point stops. This is for the rule for a brand new trader. Try to focus on the instructions. If you're brand new and have never traded before, you have to start with some basic rules. That's our basic rule. We surely hope that after 6 months or a year of trading, you're not sitting there with a limit and taking 7 ticks of profit for the rest of your trading career. Please be realistic here. You can do this stuff, but you can't if you listen to ridiculous assessments of a trading method. Okay, that's enough. We got to get back to trading ourselves. It's Friday. We want to finish up the week profitable. We'll see you in the room Monday. Thanks, guys.